Good morning and welcome to THUB Capital, THE Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to THUB Capital's THE Investors Lounge weekly podcast. Today's date is the 3rd of November. Let's dive into the week's top market news. European markets mixed amid economic data and ECB caution. European stock markets experienced a mixed sessions last week, with the Pan-European Stoxx 600 index closing 0.67% lower after reaching a new high. A cooling of expectations for further interest rate cuts from the European Central Bank tempered buying activity. The landscape for major national indexes was varied. While France's CAC 40 and Germany's DAX posted losses of 1.27% and 1.16% respectively, Italy's FTSE MIB showed strength, gaining 1.62%. The UK's FTSE 100 also closed positive plus 0.74%, partly supported by the depreciation of the pound against the dollar, a factor that benefits the index's numerous multinational companies with international revenues. Meanwhile, as widely expected, the ECB kept interest rates unchanged for the third consecutive meeting, supported by inflation remaining near the 2% target. The central bank reiterated its guidance. Future decisions will be data-dependent and made meeting by meeting, with no predefined commitment to a specific rate path. President Christine Lagarde confirmed that the inflation outlook is broadly stable and the economy continues to grow, while acknowledging the persistent uncertainty of the external environment, particularly related to global trade disputes and geopolitical tensions. On the macroeconomic front, the Eurozone showed encouraging signs. A preliminary estimate indicated a slight slowdown in annual inflation, which dipped to 2.1% in October from 2.2% in September, a figure in line with analyst forecasts. Although services costs rose, this was offset by a decline in energy prices, while the core inflation rate, which excludes food and energy, held steady at 2.4%. Simultaneously, the economy showed a slight acceleration. Euro area GDP grew by 0.2% in the third quarter, an improvement from the 0.1% of the previous period and slightly better than expected, with France and Spain driving the expansion. Lastly, the seasonally adjusted unemployment rate remained unchanged for the third consecutive month in September, holding at 6.3%. Finally, signs of resilience emerged from the UK housing market. The nationwide house price index rose by 0.3% month-over-month in October, beating forecasts for no change, although it slowed from the 0.5% increase in September. Corroborating this resilience, Bank of England data showed that net mortgage approvals for house purchases, a key indicator of future activity, increased to 65,900 in September, reaching their highest level in 9 months. Now our insight into alternative markets. A strategic leader is born. The new Italian hub for space and defense. The announced integration between Officina Stellari and Global Aerospace Technologies Group GATG, which will result in Investindustrial holding 57.5% of the capital, transcends the definition of a simple merger. It represents the strategic creation of the first listed Italian hub in the defense sector, an entity designed to compete in a rapidly and constantly evolving global market. The operation, structured as a reverse takeover of GATG by Officina Stellari, is supported by significant capital strengthening. GATG will carry out capital increases of €63 million before the merger, providing the new entity with the necessary financial solidity to pursue its ambitious development plans. From a financial and strategic analysis perspective, The benefits of this integration are clear and deeply synergistic. The heart of the investment thesis lies in the vertical integration and the complementarity between hardware and software. The deal combines the excellence of Officina Stellari, specializing in precision optics and pointing systems for observation and communications, with that of GATG, focused on advanced electronics, cybersecurity, and satellite data management. The new entity will not only build the eyes, such as telescopes and optics, but will also manage the brain, meaning data analysis and information security. This positioning allows the integrated group to be active in high-growth strategic areas, covering the entire value chain, from Earth observation to optical communications, from intelligence to data analysis and digital security. Such comprehensive coverage enables the crucial shift from supplying individual components to selling end-to-end solutions and services, which typically command higher margins. Financial solidity and scale are fundamental. The combined entity presents robust pro forma data, with a value of production of €76 million in 2024 and an order backlog of €148 million as of the 30th of June 2025. This scale is crucial for attracting institutional investors and for reaching the critical mass needed to compete for higher value international contracts. Furthermore, the operation occurs in a context of strong momentum for the defense SME sector on the Italian stock exchange Piazza Affari, marked by numerous M&A activities such as the offers for ELS, the tender offer for Digital Value, and the acquisition of Civitanovi. This deal consolidates the market and creates a national champion before competition intensifies further. The agreement must also be viewed beyond the traditional defense label, positioning itself strategically in the space economy, an exponentially growing sector. The technologies being developed are dual-use in nature, serving both the defense and intelligence market, as well as commercial applications like precision agriculture, environmental monitoring, and telecommunications. The true value of the new space economy is shifting from satellite manufacturing and launch to the management and analysis of the data they produce. By combining optics data collection with cybersecurity and analysis value extraction, the new group positions itself precisely in this high-value added segment. Finally, at the European level, there is a strong push toward strategic autonomy in space and defense. To compete with American and Chinese giants, Europe needs consolidated and technologically advanced industrial players. This merger creates an Italian operator with the scale and integrated skills to participate as a key player in European programs and tenders, such as those of the ESA or the European Defence Fund. In conclusion, the merger between Officina Stellari and GATG creates a unique player in the Italian landscape, a technologically integrated, financially solid group, perfectly positioned to capitalize on the structural growth of the space economy and digital security markets.
Thank you for listening to this episode of HUB Capital, THE Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about THUB Capital and our activities, visit our website, thubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the THUB Capital team.